On to Yes Bank now. The private lender has decided to raise up to $2 billion via preferential share issue to a clutch of investors. A large chunk of this will come from family offices. Vishwanath Nair and Shefali Malik are here to take us through the details. Vishi, let's start off with you. Who are these investors? Everybody's asking that question.
Yeah, pretty much the same on my side. But, the investment that has been announced is about $2 billion, as you said. Large chunk, about $1.2 billion, is coming from just one set of investors, which is Irwin Singh Brech, who's a Canadian high net worth individual, as well as SPGP Holdings, which is a Hong Kong-based investment firm. Them put together, they're going to. So that in October, when the bank had announced that they'd received a binding offer from an investor, that was the investor that they were talking about. That time, of course, the name wasn't disclosed. Now, remember that these two investors put together, they are bringing that amount of money. They will end up, the bank will end up diluting a considerable amount of stake. So therefore, you will need an RBI approval for this investment to go through, which is why the board has said that they're going to meet again on the 10th to decide on what to do with the final offer. Apart from them, there's Citax Holdings, which is a Singapore-based investor. They're investing about $500 million. There's a bunch of other family offices, Aditya Birla Family Office, GMR Group, as well as Rekha Jhunjhunwala, who are all investing some small amounts of money. Among the institutional investors, there's Discovery, there's Ward Ferry, as well as a top-tier US fund house. They've not disclosed who this is, probably because they've not finalized the amount yet. But the fund house is putting in about $120 million. So all of them put together about $2 billion. So that this money will be crucial for Yes Bank, because I'm sure Shefali will take you through some of the numbers closely, but it'll have to push up the capital adequacy ratio. They have a considerable large amount of stress assets on this book for a private bank. Apart from that, they also need capital to grow, because as of now, that CET ratio was about 8.7% in September. So that needs to be pushed up so that they can lend more to their retail and SME customers and thereby grow, which is the bank's stated strategy. So this money will be crucial to that effect, but everything rides on this RBI approval, which needs to come in. And the RBI has historically a very, very opaque way of measuring fit and proper. There is no clear definition as to what you need to fulfill to be fit and proper. So the RBI takes its own process seriously. Once they give that approval, only then the investment will go through. So.
Yeah, so, well, there will be slip between the cup and the lip. Let's wait and watch. But yeah, I think I loved how Vishy started off this saying that that's his question as well as to who are these investors. But with an assumption that all goes through fine, the question is, what does this mean for Yes Bank? Now, Shefali, one, hypothesis 1 and 2, but let's assume that all is well. What does it mean for Yes Bank? What do the maths say?
Well, if all is well, that'll be the blue sky scenario for them, but it doesn't look like all is well. So first, to the basic deal dynamics, the pricing works out to be around 78 rupees a piece according to the SEBI's formula, and which is lesser than the FY20 estimated book value. Even what they reported for FY19 book value, it's lesser than that as well. And on a post-money basis, the new investor shareholding works out to be around 41%, 71% on a pre-money basis. So that's huge. And also, so if Mr. Irwin, he brings in $1.2 billion, the new investment comes in as it is. So that will mean that he'll get 25.14%, and Citax Holdings, that will get about 10.5%. Tier 1 moves up by about 4.6% considering all these investments on the whole, which depletes the book value by about 11%. So that in itself is a concern that it's coming in as such a big drain on the book value. Then why the fundraising at such pricing. Also, so some of the concerns, like yesterday I was in talks with dozens of people, and despite everything, the concerns certainly continue. And one of the concerns is the absence of any big private equity name, because in the last couple of days we did hear that some of the big names might come in, but there was complete absence of any such big names. And when it comes to the fit and proper criteria, which will be the most important thing, so a couple of things might come into play, such as the legal history of insolvency proceedings against Mr. Brech. That may come in, and there's a website in his name which said that they added Palais Royal to their portfolio. So I reached out to Nibbles Housing, which was a lender to the project, and they categorically denied it that Mr. Brech or his fund has nothing to do with it. So that's one. And the balance sheet of Citax Holdings, that's very, very limited. So we reached out to Yes Bank as well. So Yes Bank said that, replied back saying that bank has relied on specific reputed bank statements to cite availability of funds, and also there's no history of, as they know it, there's no history of defaults on part of these two big players, and they will make sure that the money first comes in an escrow account. Now, if we take that at the face value, then that will be then also the RBI's fit and proper criteria will apply, because it's not just the money coming in. Where did these people get this money from? The source of funding will also come into play, and obviously considering the legal history and all, that will also come into play. So I did a scenario work out that if these two large players, they are allowed 5% stake, for 5% they don't need an approval, then in that case, assuming that the other investors who've been named in this, they get the full investment as they've proposed, then the total new capital that will come in will be just about 4,600 crores. And if they are allowed up to 10% stake, then the total capital will be around roughly 7,700 crores, which is almost half of the full investment proposed, which is to the tune of about 14,000 odd crores. So we do need to watch out for that, because there are various assumptions. For instance, IDFC Securities put out in a note that the amount of capital that the bank requires is to the tune of about $2 to $2.5 billion. Macquarie's estimate is even more higher, $3 to $3.5 billion, but they are very, very bearish. We all know that. But still, if you just take an average of, even if let's say that they need just about $2 billion and they don't pass the RBI's criteria, then it'll be a big problem for them.
Yeah, then it's almost 50% or maybe less than that. But yeah, I can answer one thing: why at such a price? Because I don't think they are finding too many takers even otherwise. At 78, if they have not managed to get in some high-quality investors, then there is an issue at hand. Well, let's see. Some unanswered questions, I think, even though they've tried to answer a few, and maybe the board meeting coming up might also throw in some answers as well.
Absolutely. So we're still waiting on clarity as to who these investors are. Some of the history with SPGP Holdings has not been very pleasant. They participated in the Reed and Taylor investment, which was under the insolvency proceedings here, but the last minute they backed out. So that raised a few questions. The NCLT had a few observations to make about the quality of that investor. There's also Citax Holdings, which again was trying to invest some money into Nagarjuna Oil, which again, NCLT case did not really work out for them.
But Rishi, that's not very uncommon, right? I was just thinking back, and that happened with Liberty House as well.
No, correct. But
in
again,
their case, I think they even proved to fail failed to prove the net worth as well in their case.
Yes, so that was a main problem with SPGP Holdings, was that they were not able to prove their net worth to the court. The court kept asking, give us updated numbers, and they were not able to submit that. Obviously, we can't really point fingers at anybody, because at this stage we don't have any proof as to whether they can bring in this money or not. But still, there's some time before the RBI gives its nod or not, and till that becomes clearer, we'll have to wait and see. Looking at the history of what happened with Indiabulls and Lakshmi Vilas, the RBI is pretty strict on who they're allowed to get into a bank.
They better be as well. But thank you so much, both of you, for joining and giving us that perspective. Okay, so that's as far as Yes Bank goes.